Hello everyone, how are you all doing out there? I am Kate Hill, as always, bringing you, I hope, the best and certainly unbiased and honest content on property, along with fantastic hints, tips, location guides. Stay tuned to hear about a bit of a myth about not receiving rent when you are building a brand new property. So given the severe shortage of housing stock, you're thinking about building a brand new investment property. But there is one thing holding you back. What about all the rent I'm going to miss out on while it's being built? Now, it's a common concern for property investors. After all, with an established property, you can probably start collecting rent from day one or whenever your tenant moves in. But with a new build, there's the construction period where no rent is incoming. But what if I told you that this issue is often more perception than reality? So in today's video, I'm going to walk you through exactly why the cost of building versus buying established ends up surprisingly similar, and how a clever approach to stamp duty savings can help bridge the rental income gap entirely. So let's break it down. So let's look at the numbers for a real world example of a property that we built recently. We're working on it with a client in the Brisbane area. This is real. I am not making these figures up. So the land cost came in at $590,000. The construction was $487,000. That gives us a total build price of $1,077,000. Now, this particular client's loan had an annual interest rate of 6.26%, which works out to 0.12% weekly. That is an important figure to know so that you can work out what your holding costs are going to be. So how does this work during construction? Over, say, a 30-week period, that's pretty average, interest payments accrue gradually as funds are released. So here's how it breaks down. Bear with me here, peeps, because I want to take you through it, okay? Land deposit, $59,000 held for the full 30 weeks. That is $2,131 in interest. The balance on the land cost is $531,000 held for 27 weeks, $17,260. Next, you've got your deposit for the construction, which is $24,350, held for 27 weeks, is $791. You've then got the base or slab stage, $48,700, also for 23 weeks, is $1,348. Frame stage, $73,050 for 17 weeks, $1,495. You've then got what we call the enclosed stage, $170,450 for 13 weeks, is $2,668. You then have fixing. It's $97,400 for 9 weeks, is $1,055. And then finally, what we call practical completion, $73,050 for 6 weeks, is $528 in interest. Now, all up, the total loan interest during that construction phase of all that I've been talking about is $27,276. So here's the kicker. When you're buying an established property at the same total price of $1,077,000, the stamp duty would be in Brisbane approximately $46,800. But when you are building brand new, you are only paying stamp duty on the land component. So in this case, that is just $21,800. That is a saving of $25,000 right there. So if you are worried about the interest that you're paying while your property is being built, this is your key takeaway. The stamp duty savings almost completely offset your construction phase interest costs. And wait, it gets better. Under the ATO's tax ruling TR 2023/3, interest on the construction loan might actually be tax deductible along the way, as long as the property is being built to produce accessible income. So that means that the true net cost of building new when factoring in those deductions could actually be less than buying established. So you are not just breaking even, you're potentially ahead. This isn't dreamland. As I said, I'm not making this up, this is real. You need a top-notch savvy accountant, of course, on your side to advise you. So is it a myth that you lose out when building because there's no rent coming in? Well, I think it is a bit of a myth. Once you factor that stamp duty saving in, potential loan interest deductions, building new does not leave you worse off than buying an established property. In fact, you might actually come out ahead with a brand new, lower maintenance investment in a growth area. Always, as always, right? The key is careful planning and understanding the numbers up front. If you're considering a new build and you want to run the numbers on your own scenario, feel free to reach out. Obviously, we're going to be happy to help. And of course, you can run that scenario on any example. It doesn't have to be over $1 million. You can make it a $650,000 example or an $850,000 example. There are locations out there where you can build brand new from as little as $650,000 in a great growth location. So do let us know if you'd like more information. Now, as always, everybody, I am going to keep you posted on all things property from around Australia as our year progresses. Don't forget to hit like and subscribe if you are enjoying the free content. I'll admit today was a bit of a sales pitch, but what are you going to do? I will see you all soon. Bye.